What's up, guys? How's everybody doing? Just give me 1 second. Hook the chat up. 1 minute. There we go. What's going on? What's going on? How's the music? Probably a little too loud, right? Let me lower that. How's the mic? The last couple of streams, I had the mic on a setting that was meant to pull sound from the entire room. And that was an accident because the setting I need to have it on, I think it's called like cardioid or something. And so the last couple of streams, there was a little bit of an echo, or a lot of an echo. So I apologize for that. Hopefully the sound is better now. Just give me a volume check on the, damn, I'm talking a little loud, so maybe that's why. No, the mic should be there. Sound is good? Cool. So what's going on? What's going on? We'll give everyone a minute to join in. You like this shirt? This is a, I thought this shirt was funny. It's even funnier now that I found out that I'm going to be a dad. This is one of my golfing shirts. It's from a brand called Rowback. So I know the team over at Rowback. The mascot for the brand is actually a Rhodesian Ridgeback, and I have a Rhodesian Ridgeback, which is pretty funny. But the shirt is covered in dinosaurs. So you see like the little Rhodesian head right there, and then there's a bunch of dinosaurs all over it. And I bought it as a golf shirt, as a gag, because I thought it was funny. And now I might have to buy a few more since I found out that I'm going to be a dad, and you know, kids love dinosaurs. So anyway, I don't work for Rowback at all, but I do know the team, and it's a great brand. I think it caters to like golfers, tennis players. It's like an athletic wear company. Okay, mic is not close enough to me. Well, I'm not going to change much around, so hopefully everyone hears me nice and clearly. All right, let's get started. So Tuesdays, Thursdays, 1 p.m. Eastern Standard Time. Been doing this consistently now, like I said, until the bear market is over. I host a call-in right after this, so at 2:30, I hop on a call-in for a half an hour, and that's an AMA. And then on Fridays, I have a pretty open discussion call-in, but it gives you a chance to, after the stream, if you have any questions, to hop on. You know, either you could listen in on Apple iTunes or Spotify, or you could actually use your iPhone or your Android to actually participate. So it's better than Twitter Spaces. They're archived, they're saved, right? You could access them on my call-in webpage. You could access them on the Spotify, the iTunes, Kenner & Clark Trading Lounge, and they have transcripts. And yeah, it's just a great platform, and I really appreciate the guys that call in. Before we get into anything, if you're not a subscriber, hit the like button, hit the subscribe button. We're doing this consistently now. We want to build up a good amount of participation, and us showing up consistently has proved to help further that and to build an audience. And it's nice to see familiar faces, and we appreciate the love because again, we're starting to do this more. No financial advice. Remember, no financial advice. Don't be rude in the chat. Don't ask like the same question a million times over. I'll get to that stuff when I get to it. I'm obviously going to go through my spiel. No financial advice. And if you're interested in any of the platforms, programs, order flow suites, anything that I have, I'm very available when it comes to sharing that stuff. So, you know, we have Phemex exchange below, so use the link Phemex.trade. That not only gets you access to whatever bonuses and promotions that they're running, but they have phenomenal customer service. And if you ever have an issue with Phemex, you just let me know, and I'm very quick to help out. Also, again, any platforms that I touch on, anything that you see, and you're like, what is that? Like, I don't know. On Twitter all day, I get that. You know, what are you using? What's the chart? And I go over them in the live streams constantly. So I say them ad nauseum. I use the same platforms pretty much all the time. So if you do have a question, make sure that you ask. And links are below. And like I said, myself and my partner, Josh Rager, we have something coming out that will be very useful with respect to that last part that I just went over. And that covers it. Let's get started. And oh, one more thing. Shout out to 17 Bidding. He is the hero that provides stream summaries after the streams. So the guy is right on it. So after the stream, you miss the stream, you don't understand something, he has been on the ball with covering every single point that I touch on, and he does away with the fat. So he trims the fat, because you guys know that whenever I stream, like, I speak in ellipses, I go off on tangents, but 17 bitting, he knows me, he knows what I'm trying to communicate, and he does a great job of covering all the streams. Okay, we're gonna get started, right? I want to start the stream with a trade that I took this morning, and it's easy to go over trades in hindsight, but what I'm going to do is I'm going to show you, without showing you the actual people in the chat, I'm going to show you a transcript from a room that I'm in, and it's a very intimate room of some of the best people that, highest respected people that I respect in this market, some great traders, developers, builders, and it was basically a play-by-play of what took place this morning. As I saw it playing out, I basically called the bottom in the room. I'm not patting myself on the back, but it's all, like I said, it's all transcribed. What I did was, I have a screenshot that I'm going to show you in a second, and it goes from 9:16 a.m. to 9:43. And in my trading, I look to trade the wrong prices. I look to trade imbalances. I look to trade traps, right, where traders are offsides, where no longer buyers and sellers are being rewarded for the efforts. So we're going to go over that setup, and then we'll just handle this like a normal stream, right? Take questions, look at the higher time frame chart, briefly touch on the macro. I don't want to talk about the macro guys anymore. I swear, if you look at the transcripts from the last streams, it's just as relevant as it was then as it is today. Only difference is yesterday the minutes came out, so we have the minutes, which is old news anyway. So it's not like there's anything updated. It just shows, who voted for what, right? Where they agreed, where they disagreed, if at all. And, there's a possibility now, more of a belief now, that they're going to hike less towards the end of the year. I said in the last stream, don't be surprised if the market interprets less hikes as something that's not bullish. Everyone in crypto is really quick to think, now we need to, now obviously we need some relief. We need QE back. Obviously, that would be incredible, but let's not expect that anytime soon. Okay, so what's the thing that would precede that? Maybe rolling off the balance sheet slowly, or maybe not as intense as they expect, as people expect, or market expects, or slowing down the rate of hikes, taking a hike off, anything that is not expected now, which was plenty of hikes into the end of the year. So it might be perceived by the market at some point that if let's say that they do, and this is why I'm just saying this so that you're not surprised if it happens, because there's a lot of things that won't make sense if you're new in markets. Let's say that they announce that they're going to take off hikes in later end of the year, right? Or instead of 50 basis points, it's 25. And we have some kind of big down day. And you're thinking, what the fuck? This should be bullish for risk assets. Well, market might interpret that as the Fed not taking inflation seriously. And the inverse of that might be that if they attack, and this is something, if they tackled it a little bit earlier, it'd make more sense. If they had a more aggressive rate hike, then the market might interpret that as being more bullish long-term for pricing in, obviously, the future, because it looks like they're taking inflation very seriously. Now, the thing is, we're actually, and this is the last little bit of I swear, we're actually at a point now where inflation fears and inflation probably have peaked, and now we're more into, the recession narrative, right? The situation around the recession. Are we in a recession? Are we, how far are we into recession? Is a recession coming at all, right? These are all the things that are, sort of saturating, permeating most of the conversations taking place. So inflation peak, probably, most likely, and we need to get to a point where recession fears peak as well. So I don't think this is over by any means. I think there's a lot of great short-term opportunities, but I definitely wouldn't want to get in a position where you just think now market is up and up. We had some good bounces across the board in equities, brief period of decorrelation or decoupling, end of month flows that are expected, but it's really important to be, I think, still pretty vigilant, pretty guarded. So let's look at the setup first, because I want to get this out of the way. And again, it's going to give you sort of insight into how I was looking at things and what exactly I saw, right? And you're going to see that this is the exact transcript of events that I spoke about inside of this particular room. So again, let's set the stage real quick. Now the stage is, and by that I just mean, here's the actual transcript. Let me just go to another screen first. Let's set the stage. Okay, so I'm not going to highlight anyone who said this, right? But this is something that preceded the conversation you're about to read. Okay, so we have a 12, this is 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13, shit. Lucky number 13, it's one of my favorite numbers. 13 and 7. So we have a 13-day long range. Value has been pretty much in the same area this entire time. So we haven't seen value deviate much. Now, clearly on the inside of this structure, right, so this box is where we spent 70% of the time throughout the structure. Throughout the inside of the structure, we had a lot of imbalance periods. We had double distributions, very imbalanced periods within here, sort of a gap in the center. Yesterday, the last 2 days, was the first time we actually began to fill that out. A lot of imbalance within the structure, but again, 70% of the time throughout the structure, we were within 29.2 and 30,500. And when I say it didn't change much over time, what I mean is when we were here, it was basically the same, until we got up to here. Okay, so it's not like value began to migrate much higher or much lower. We're in a really tight range. Everyone knows where the high is. Everyone knows where the low is, which makes those levels very significant. And the longer that you move sideways, the more you build up that potential energy, and the more you build up that, possible release through one of those sides, right? So when the market is really focused on, and again, most people looking at charts, market's been in a range for 13 days. Everyone knows that, hey, if we break to the upside, that's probably going to be meaningful to the upside. If we break to the downside, that's probably going to be meaningful to the downside. Or rather, that's the first order of thinking. And because we spent all this time moving sideways and really establishing really tight levels, those are the areas where the traps can really get, vicious, right? So when everyone knows the same two levels on the chart, everyone's probably going to be acting around those levels, right? So if anything, those are the levels where you really want to be able to determine very quickly if it's acceptance and continuation or if it's rejection, right? So some kind of failed auction, and that's what we had this morning. So in the chat, we were into the breakdown underneath value, and someone was saying, and this is, someone who's great, and they were saying, we broke outside of value, acceptance outside of value, don't fade this, right? This is literally in the first couple seconds into the move. So yes, we broke outside of value. Everyone sees this happen, right? So this is something that there's a significant chance, mind you, into this move. So just to set the table a little bit more, into this move, the S&P is moving up and crypto has no bid, right? So it looks like crypto has no bid, decoupled, and it's not a favorable decoupling in the moment because the S&P at the time is moving up back above 4K, and instead BTC is what? It's beginning to break down. So if you remember, in a tweet, and I reshared this, it was like May 21st, I think, I said, and this was up at the highs, I'm not going to buy this until we actually show acceptance outside. This is another chance where longs might get punished, right? There was a significant buildup in open interest up into that level. So I said, I'll wait for 28K. And the idea was, we hadn't really taken any of those lows. We have a really good opportunity that probably the market would rip back into this level, and we might see a significant bounce outside of it, right? We've seen this many times before. Market looks like it's going to break one way after a long period of sideways activity, and this ends up being the trap that takes us much higher. And the inverse of that is when you have a structure that moves sideways for a long time, breaks up, traps everybody, and then finally gives you your second dump that everyone sort of wrote off at that point. So the table's set, right? This is a great opportunity for a trap, and it was also an area where it was a good, good area to expect a second response by the market. Now, mind you, this level was also back into the wick. Right, so if we look at the initial move, and this goes back down to May, this is May 12th. The wick is down there, right? And one thing we talked about is if this is going to be a bottom, more than likely you revisit those wicks. Absent any kind of major short interest, major increase in open interest into that initial low that hadn't changed, absent any kind of significant catalyst, it's very likely that the market doesn't just V-reversal off of that level. All right, so now let's go into, the table was set for the trap, and so I'm looking for either, potentially continuation, right, signs of continuation, or signs that maybe we're beginning to stall out and reverse, okay? So here's the actual transcript. I'm just going to read through this. This is not edited. This is exactly what happened. And the point of me showing you this is because I don't like looking at things in hindsight and saying, oh yeah, that was clearly a long. And then it's like, well, did you fucking long, right? Or are you just pointing out what is so obviously a hindsight, what is clear in hindsight? So this is at 9:16, and I said, it's oof. I wrote oof. Spreads blowing out. So what I mean by spreads blowing out. So we're gonna go this. And this is a very low time frame chart. So this is a 15-second chart. And Binance is where most of the open interest is. Binance is where most of the trading is done. So these are Binance perps. This is a 15-second chart, right? So 15-second chart. This is not going to show you the actual spread, but this is an indication that spreads are blowing out. So you can look at spreads through some type of DOM surface. You could see the spread blow out on a DOM, just a DOM, right? So there's a DOM surface and then a DOM. The DOM surface is going to be, a bid-ask line, and you'll see that the spread is maintained. And when it blows out, you'll see, the offer and the bid, a significant amount of space go between them. And, market makers step out of the way. There's a ton of toxic flow. Liquidity providers pull. So spreads blowing out means that the distance between the bid ask, right? So the bid offer, right? The spread, it blows out in multiples of what it normally is. Now you'll see that it'll maintain, a normal value, whether it's 10 basis points across, certain exchanges, 20 basis points. And then you'll have these times where the spread might blow out, greater than a percentage, 2%, 3%, crazy blowouts. And this is something that if you're looking at if you're looking at a chart, you could see if you look at a really low time frame chart. So you can look at it on like a 1-second chart. It's going to be really obvious. I don't suggest everyone trades on a 1-second chart. This is something that, again, you can see the spreads blow out much better, obviously, the lower aggregation that you go. You can see it on this 15-second chart. So you see the gaps in these candles. You could really see it on a tick chart. So if you look at a tick chart, so a chart that generates bars by amount of trades that go through, what a spread blowout will look like is a bunch of bars that look like this. So these all might be 1-second charts. These might be tick charts, range charts. There's a ton of really high range candles in a really tight area, and really nothing took place, okay? So that is the beginning of something. This is exactly what I noticed, right? So a spread blowout usually occurs also when you have a stop run. So what you'll see is, if you're looking at a footprint, so if I zoom in where that occurred, so you see how this entire right side is a bunch of zero prints? That means that never went offered, right? So there was no activity that took place from 28.2 all the way down to 28 against the offer. So what this means is basically the offer that followed price down here. So, the bid offer might look like, if it was on the margin right now, might look like something like this. Okay, here's your bid. Here's your, your ask or your offer. So as the market burped through that level, and I call this burp, right? I say when the price burps, that's what spreads look like when they blow out. I just call it a burp. I don't know why. Just first thing that comes to mind. The offer never came down with price. So the bid continued to track down. The offer never did. So that's where you know that there's a significant space that occurred between a significant space in the spread, right? So the spread out a lot. That's probably the best way to put it. So we see spreads blow out. And normally spreads blow out when you have, a ton of volatility. So price pukes through a level, whether it's a high or a low. Market makers get out of the way. So this means that they don't want to provide liquidity. It's toxic flow, either expecting a very significant move and they know that price is going to move significant distance and it doesn't make sense to try to provide liquidity right there. Or it's a stop run. In this case, this spread blowout was, obviously both to some degree, but we had taken what had not been returned to for days. So for 13 days, we hadn't taken any of those earlier lows. We had marginally higher lows, 1, 2, 3. We hadn't taken a low, except for the 23rd where we took the prior day's lows. Other than that, we hadn't taken the lows earlier within the range, going from, all the way up to May. This is May 20th. So obviously, as we move sideways, as a range begins to paint, if you don't have interruption of highs and lows, you're going to have a significant amount of stops around those levels. So I mention this on YouTube on Twitter all the time. Spreads blowing out. One sign of, usually a sign of a potential high or low. So that's at 9:16. That's right here, right? So spreads blew out. First sign, okay? First thing that's making me think this is not going to lead to continuation. You have liquidations, spread blowing out, small amount of volume. So if you look at this green candle, so you see this green candle right here, right? the two big candles, okay, look at the ranges, so I'll get rid of this. The two big candles that occurred on much larger volume, we get an engulfing green candle, nearly engulfing, that follows on much less volume. So that's another thing. Your spreads blow out, liquidity dries up, a little bit of volume ends up taking price a long way. So again, this is another thing that takes place at significant, turning points in price. So the next thing I say in the chat, spreads blew out for a second and OI still up, but dropped after a small pop. So on the way down, OI still up, no major decrease across the board. So it's not like what we saw was long liquidations, right? We're seeing that shorts are still comfortable. Shorts are clearly on the right side of the ball and still adding into the position. Okay, so the only time that the open interest began to go down was when price started ticking up a little, and we started seeing some of those shorts begin to liquidate that were a little bit late. All right, and then someone said something about New York Open not being, New Yorkers not being up yet, and I had said, midday London, late Asia, unless New York hasn't gone up yet, but I mean I'm up, right, because I'm in the New York session. And I said the squeeze opportunity is there, that's all. And someone might have commented something, oh, this is where he said something about acceptance. And I said, right, which is why if there's any location for a trap to occur, it would be here. The next thing I said was it's remaining bid on Nance. So remaining bid on Binance, spread blows out, right? I said, the next thing I say at 9:34, and this is right, now we're we're all the way over here. So 9:34. Okay, next thing I say is spread blew out around 28, right? Market maker's gone. Now willing, though, to get hit at 28.2. So I said price remains bid now. What I mean by that is we saw a brief period of liquidity providers step out, right? We saw an unwillingness to step in the way of price. We see a ton of activity into this low, right? So you have selling, you have these zero prints, right? Zero prints at the low, again, meaning that the offer is not following price down there anymore. A significant amount of volume that comes in right here, right? So looking at 238 million, 94, volume beginning to slow down, right? Delta still very aggressive though, aggressive selling towards the low. And then this is where 28.2 begins to remain bid. So what I mean by that is if you see we had a ton of selling into the low, right? This is the level where you had a blowout begin, right? So 28.2. So this is where 28.2, 28.240, so these zero prints, and then extending that forward. So that price that, one, the offer wasn't willing to track down, where spreads blew out, followed up with selling that took price further down. Now as we transition, price is able to remain bid, right? So what we have is we have a ton of selling that still comes into the market, and this time price is willing to track upward, right? So the bid is willing to track price upward, right? So as we're moving up back against price, the bid is following up, and a sign of ultimate weakness would be if the bid just stayed completely off price, right? If it was unwilling to follow and track price up. And then from here, it just really begins to change, right? We see that there's another effort towards the low, price again remains bid. So I'll put the candles on so you see what was taking place. So here's a red candle, here's the wick, all the volume below. Here's a green candle or a blue candle. There's the second attempt to break down below there. Again, this was the level where spreads blew out and began. And again, price is remaining bid above that level. So I say, the concept I say when I'm talking about a level holding, and I say it's sold and it holds. So sold and hold, that's what I mean. I don't want to just buy because price is back above the level, or because we've tapped it, or we're through it because for 5 minutes or 20 minutes. I want to see that when we're through it, that we're able to sell into it again, and this time it actually acts as support and it remains bid in this case. So that's what I mean when I say remain bid. So on the way up now, things just had completely changed. So if we zoom out, okay, completely changes. We had aggressive selling further into that low. Let me just pull this up so you see. So we had CVD. Ooh, that's a little too fat. Hold on. CVD making equal lows. All right, 1 sec. I think I just pulled this up too much. Come on. How the fuck do I drag this back down? Bear with me 1 second. I just stretched this so far up. I'll have to do that again. So CVD had made an equal low. I don't think we have to actually worry about. There we go. Where the fuck did price go? Ah, there we go. Sorry about that. So CVD makes an equal low up here, right? So CVD equal low. Prices at this point is 200 points higher. So it's clear that there's still a ton of aggressive selling, more aggressive selling, if not, and price is able to now actually track upward. And then you have a complete flip of activity. You know, once it remained, I was already beginning to build a small position down here just to tag something on. Once I saw we remained bid, I smashed this as hard as I could, right? And immediately after, you have your signs that buyers are basically seeing and doing the same thing. So this move is really thin, right? It doesn't, at this point, once price starts tracking back upward and you see that there's a significant amount of open interest that came into the move, what's going to happen 9 times out of 10 is we're just going to completely wipe all the rest of the open interest, right? So all the new participation that came into the low, all of that aggressive new selling, you're going to see price just completely slingshot, back in the opposite direction. Okay, so this was just one trade, right? But you could see, like, in a very short amount of time, this is like in a 15-minute period, there was a lot of things that took place in that short amount of time. You know, things that really added up to indicate that sellers are completely offside. And not only were sellers offside, but now buyers were willing to actually step in the way. And once you have a structure like this, okay, accepting back within that, you know, if you imagine this as it was sort of a double distribution. So we had a gap down. Once you start accepting back in there, right, and you're making a series of higher highs, higher lows, you know, if you're just purely price action, you're not going to see that price, you know, continue to catch volume into these lows and move higher, but still, you just kind of more often than not cover that. Like, you could just bet that you're going to cover from this point to just imagine where you departed from. So where we began to puke from, you're going to cover that level. And more than not, you know, more often than not, it's going to slingshot all the way back in the other direction. Leading into this, you had a series of lower highs that were uninterrupted. Sorry, I'm looking back up the screen to make sure that you're still following. Leading into this, you had a series of lower highs uninterrupted. You know, once you start doing something like this, and again, just zooming out a little bit, remembering that we did this into a very significant contextual level for the last 13 days, right? So it looks like we were breaking down. You're going to get that, you know, slingshot very far back in the opposite direction. Does this all make sense? Did this all make sense? You guys understand everything I just said? You know, the process of thinking into this, the process of seeing spreads blow out, you know, why that happens, how a little bit of volume having a big impact on price means that the book is really thin and it's going to be easy for price to pass back in the opposite direction. And then seeing that where price was previously no longer able to be supported, right? So on the way down, no willing bid. Seeing that when it's actually higher than where that occurred, price did remain bid. Understanding why that's important. Good. Because suddenly it means that buyers are interested, right, in providing. And these kind of things take place all the time, and the market sort of rallies behind pushing on them, right? So leaning, this is where whenever I describe my trading and I say, when I see imbalances, I try to lean on them. Leaning on them means slamming into the offer at that point, marketing in, trying to get price to tick up further so that stops are, you know, so potentially stops are in or people are forced out of positions. And then again, it's a very predictable move after this. And you can see what has happened since. Let me just get away from the footprint now. Sec. So what has happened since? One sec. We're back inside of the last 13-day value, right? So this is so I ended up closing out my longs. So I closed out initially after we overthrew up here, ended up relonging, right? So I ended up relonging higher. So I ended up closing out right around here for, I think, closed out for like 900 points, so maybe slightly lower. And then once we put in a low and we started to see the same behavior again, I just relonged, and then ended up closing out as we approached the beginning of this move. And that's for a couple of reasons. You know, very significant move. Got some tailwinds today. And again, yes, so yes, still long ape. Very significant move, have tailwinds. But now we're back, you know, we're basically back within a range, right? So for me, I want to see now I want to see some actual development because it's clear, what we actually just did. So before I do that, let me go back to this and show you what we did from that move. So here is the beginning of the accumulation of OI. So looking from, let me just make sure that the screen stays. Okay. So here is it looks like we have a breakdown outside of value here. Market moves sideways, open interest going up on selling. Okay. So sellers preparing for this move, breakdown, open interest up into this level. And then if you look at the open interest from left to right for this structure, so from here to here, so now we're back above that structure where the open interest started accumulating. We're basically, we've almost done a complete round trip with that position. So this is kind of like, after the squeeze has occurred, if I'm taking a trade on behalf of this, I'm getting out of the trade whenever that level of OI that sort of gave the move fuel to begin with. If we've already come into a sticky level, right? If we're at a important area market structure, if the tape begins to slow down, we see that open interest has, the open interest that accumulated that helped that move has kind of been wiped. Then you're going to be relying on the spot market and new buyers at that point. And I'd rather just take off at that point and wait for things to redevelop. And it's kind of I think it's a really good area to do that anyway. Because again, this is a great move. We've seen many bottoms happen like this where, we're higher in the next few days. And this slingshot was, pretty much the turning point. But, we're fighting at the value area low now. And we haven't taken any of these highs. And we're kind of beginning to lose a little bit of steam right here. I would honestly, I have two boxes on here, one sec. Just make sure that so it's actually here now. I would like to see the pullback, right? From a risk to reward standpoint, I have spot, right? So spot's fine, but for me to actually open up any more futures positions, I would honestly rather see development. So towards the high, we had a little bit of a divergence, right? Which is a sign that buyers did get involved, but they're getting involved a little late. So you had positions squeezed out. How can I show you that? I could show you that on this. Hold on one sec. So here's the high. All right, so you guys can, hold on, you can't. Let me move. Oh, you know what I'll do? My bad, hold on, sorry, adjustments have to be made. All right. I just want to fit this window in without fucking too much stuff up. You guys remember I used to stream back in the day and I'd press a button and like the whole screen would resize and it'd be fucked. Excuse my language, but you guys know. By now you have an idea of occasionally the colorful language I like to toss in. So here's your high, right? This is your, you got a ton of aggressive buying towards the high. So, it's basically your third drive at this point. So 3-drive structure. You have a lower high on lower volume. So pay attention at the low. I don't know if you guys can see. You can't. One sec. There you go. So a ton of volume at the highs. Very aggressive. On this next move, it's basically like a fifth of that, or even a sixth. So it's kind of like, momentum's dying, but your delta and as still, your cumulative volume delta is still making a new high. So you don't have in excess of total volume, it's not there, but your aggressive buying is still there, right? So you made a new high in CVD, a very clear sign of absorption at that point. And again, you're into a key level, right? Your open interest at this point is pretty depleted. So it makes sense to expect, that possibly we see a little bit more of a pullback. Maybe we don't. Maybe we, rocket right up to the highs. From a risk to reward standpoint, I like the trade that I took. Maybe we have a little bit more meat behind us in the short term. But where I would want to get involved is a little bit closer back down here. If we look at just today's profile, I'll just put it on this chart. Here's the point of control from today. Point of control, VWAP. So you have a nice area of confluence, okay? Nice area confluence right around like 29, 29.2. Prior value area low of the entire composite, so the last 13 days. Today's VWAP, right? Round trip is basically the center of the range. And that's why it's lined up with the point of control. So if anything, maybe we get some kind of scary dip down here. We see another trap develop, right? Sellers really slam it. And then if we do something like that, and then we're able to trade back up in this range, then, again, this would qualify to me as, at least begin to qualify as maybe the kind of development that I would want to see before putting on like a larger swing upward. And I do think that if we get this, so we just give it a little bit of a higher time frame picture. I do think that if we get that development here, took all those lows, I do think it gives us more than the range high revisit again. Makes sense as like a first logical target. Again, high, uninterrupted, so plenty of stops. I mean, we can't just say there are plenty of stops, right? That's an assumption. So there's an assumption that because there's uninterrupted highs, that it's easy to like cascade through that level. So when I see that, right, I just kind of bet in that favor. If we break down, let's say we don't get the full pullback that I would like, if we start pushing up to this level, I might just get aggressive because usually you'll see something that moves pretty quickly. But I think that no matter what, as long as we hold the composite, if we can hold this, I think that this ends up giving us a larger move, right? I mean, we decoupled briefly the S&P. Just go to big picture. Big picture is kind of like a macro, I was going to say playlist, a macro watch list, a little bit of crypto. Here's the ES, but the S&P is up 2% today, right? So that's great. QQQ up 3. Very strong response. Again, I don't want to like, this is, my post is still there. This is at the bottom. I said I could feel a face ripping rally. Oh, how convenient, right? I don't want to get overly aggressive, right? This is a really nice bounce by stocks. We're not in any kind of market, I think, where you could say that this is the bottom yet. I think no matter what, let's say that this is the bottom, and you ask me, hey, what do you think is, if this is the bottom, how does it transpire? I think that it moves sideways still. So, we have a very significant level of 42. Again, the levels that I got for the S&P were pretty basic. Yearly points of control, right? So yearly point of control right here. The next major level would be right around 34. But yeah, last year's highest volume node was expected to act as support. So for us to develop around here, would make sense. Any move lower at this point, losing 38, right? Acceptance through 38, we don't have much until 34. So if we move down to 34, right? Everything's positive right now, so I'm not trying to be like, someone who's negative, but if we move down to 34, crypto drops another 20%. So, Bitcoin drops another 20%. But that, things are looking great today. Again, year-end flows, rebalancing, all these things are kind of clockwork, but it's nice when it happens. Again, though, not trying to get like overly confident. If we're back above 42 or 41.50, we're finding support back above this pivot. That was the first quarter low, the low of the first quarter. Then yeah, maybe we could talk higher prices at that point, or extended targets. Does this all make sense? No, I was showing you on a 15-second chart what a spread blowout looked like, and that hasn't been on the screen for a little while now. So, where was that? Hold on a second. Oh, okay. So, high time frame. Let's say that we end up breaking back above this composite. We do get that extension. This is the most significant level on the chart. So between 33, 35, that's where fireworks should happen. There's a couple reasons, right? That is a monthly level. So going back to this monthly low of this entire structure. One sec. Monthly low of that entire structure. So that's right there. And then you have what had been This is that's a yearly value, right? So if I were to put standard deviation bands on this right now, you'd see that we're hugging sort of the low of this year's value. But if you're looking at a profile, right, standard deviation bands, yearly VWAP, that's going to move down. It's dynamic. What we're doing is basically establishing another high volume node down here. But still, monthly level right here, right? So monthly level, range lows, value area low of this year, if you're looking at it from a profile standpoint. So, this is the next sticky area, okay? This is an area, though, I said I definitely would not want to blindly short. This is an area where you could get a lot of people that are blindly shorting and then easily blow all the way up to like 40K, right? Sort of like a G candle from 2019, October 2019. You have a structure that the structure in 2019 was like 89 days long. We broke down. It looked like you had to have a continuation lower. We flagged. We broke up. Everyone sold the underside. It was the G candle. We ripped up to 10,000 something in a very short amount of time and blew out a lot of shorts. So that's the danger of a structure that's really obvious like this, right? So I wouldn't blindly sell this. If we develop above here, it's going back to range highs, right? Development, able to accept above there, no, very obvious rejection. Things have drastically changed at that point, going back up to the highs. A blow through here, wouldn't want to blindly short it because maybe it is a good short, and maybe you have a wick up here, and then you get one of those slow bleeds down over time. And I'd rather see that, right? I'd rather see, we blow through this level, and then you're back underneath the range. And then maybe you're looking at a very obvious short back down here. But blindly short just sounds like a really bad idea. Anything that even approaches here and then develops here is still kind of a dangerous idea. So, when things look really, 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 really ugly, sometimes that's where they really, really change, right? But again, not calling a bottom, not saying any of that, just saying that, hey, if it was going to be a bottom, right, that's how it would transpire. And not for nothing, there's that not for nothing. We're still kind of, listen, we broke in some really significant levels. 1 second, let me get rid of this. We've broken some very, very, very significant levels from a monthly standpoint, from a weekly standpoint. But that just means that's a data point, right? That's a candlestick has 4 data points. People act on them, right? But if you zoom out, still, if you look at a line chart, it's probably a better idea. We're hugging what was, we're below. We're kind of. If you look at the wick, gives you a little bit more hope for where we are, because it's not like we've really left the range drastically, right? If we look at sort of the low of 2021, right there, we're there, right? So the low of last year. If we look at the low of last summer, we're there. We're above it. That's on Bybit, but if we go to if we go to, Binance, the low of last year, the low of that summer, right? We're technically speaking, we're still within the range, right? On a really high resolution zoomed out, from a really high resolution standout, perspective. Does all make sense? This kind of looks like this. Kind of this like potato grind down. I don't know why I called it a potato, guys. And I don't try to be funny during my streams. I'm not here to crack jokes. So sometimes you just hear some random shit. I don't know why I called that a potato. Maybe it's because it's just after you encapsulate it with sort of a oval like that. So yeah, if let's say, all right, flip side, right? You get the breakup, nothing crazy happens. Let's go back to profile. Get a breakup through here. Retest this. We'll open this day to give you an idea of how the day is kind of unfolding. Retest this, breakthrough. And then let's say we get something exhaustive here, and then don't have any kind of further follow through. Equities begin to move lower again. Just trying to paint a little bit of context. Equities begin to move lower again. Equities have already kind of extended themselves off of the low considerably. Bitcoin's just kind of beta to it. And then if we're back within this range, it's the same setup that we're doing right now, but in the opposite direction. Spread blowout up here, stop run, blah, blah, blah. Haven't taken any of these highs yet really significantly. And then if you're back underneath 30,500, then we're just targeting back down to range lows. And then, at that point, it's like, well, we moved sideways a lot. We broke down, we failed to break down. We broke up, we failed to move up. The next move always just seems like the most likely one to get behind. Yeah, it does look like a potato, right? So everyone following this all stream makes sense. We want to, my point was to really drive home like the idea behind that short-term trade, because a lot of my trading is intraday, right? They're trades that don't last too long. I take a lot of swings, but this trade was something that didn't last long at all, but it ended up yielding. There's the post that I was talking about from the other day. That was when we were up here, not looking to basically long from up there and waiting for 28 to come. Two trades this morning yielding like 1,600 points is very significant, right? This move off of the low, it's a 6% move basically right now. Spread blowout, I went through it in the beginning of the video, and if you didn't get it, it'll be in the transcript and the notes, the summary after, but or just rewind because I went into it in detail. I'm not going to go into it again, sorry. Does anyone have any other questions? Oh, off of the lows. So one thing that I always do when we put in a significant high or a low, so whether I want to look for the best thing to short or the best thing to long, and this morning was especially the case because it was a significant blowout in BTC and through a very important level, I look at my relative performance chart. So I look at this and I want to see very quickly who is sort of the fastest out of the gate. And I ended up longing Ape because I was going through the charts, and it's like, you end up, you see these things playing out and they're going to happen pretty quickly. So if you start scanning as Bitcoin is squeezing up, if you start scanning, by the time you end up scanning all of the charts, like let's see, for example, I'm looking at this and I see, okay, top 10 clearly right here. Let me go through the charts and be really anal about which one which positions I pick up. Sometimes it's best to just, the first one that you see that looks decent, tag on a position. Especially if we have something that's a squeeze in progress, and these are beta to BTC, and they're already, returning 2-3x. I just want to be part of what is likely going to be a much more significant move. You could look through it, a little bit more. You could look through it with more of a fine-tooth comb further on, but I'd rather make sure I had on a position. And there was not much to this. I was looking at Ape. I had the TPO chart already up on EXO charts. I'll go back to that because it'll make more sense. Had the TPO already up on EXO. We were into the point of control, right? Oops, that's not it. That's a BTC screen. Top left. There we go. So that was my Bitcoin DOM. So this was again, sort of the same thing with BTC. More of a drift lower though overall. Open interest up into this. So that's not the perp, but open interest going up into that low. Broke down. Your naked point of control is right here. It's good off of the lows so far. Looks like BTC is going to continue to move up, and ultimately expecting that this, more or less does the same. So very fast position to put on. I switch between delta ladder and bid ask. Sometimes I think that sometimes it honestly just comes down to scaling. So if I have, I'll just show you what I mean. And this is pretty stupid, but I'm seeing the same thing either way, right? If I'm looking at this, sometimes I'll switch between the volume or the bid ask. If you're looking at this right now, so for example, and is this what you mean, looking at the bid ask profile? Sometimes this just scales weird, right? So for me, I need to be able to visually pick up on things pretty quickly. So you'll see me making changes here and there, and a lot of times I tell you that the changes are basically, it's a visual thing, right? It's almost an aesthetic thing. So if I have this on, it gets kind of clumpy, and I find that when I switch between this, if I'm going through pairs, I have to constantly make adjustments, where if I have the delta ladder on, it always just looks a little bit cleaner to me. But at the end of the day, that's not really a huge, of huge importance. And neither is honestly having on, if I have the bid ask on, I could see if there's like crazy imbalances. And also, again, I like to have the bid ask on because you could see if one side was just completely zeroed, right? So at the low, it's really easy to spot that there was a stop run and a spread blowout, because you see just one side completely had no business done against it. Whereas if you have the volume on only, you don't see that, right? So we don't see that, going all the way back to the low, we don't see that there were zero prints into that. You just see that it was really thin, right? Thin, right? There's no coloring at all. But you don't see the zeros, so you never see that there's actual, no activity done against the offer, no passiveness, no one passively providing down there. But what you can figure out, without looking at, is kind of just a no-brainer. Delta is going to be, it's going to be red or blue, depending on if there are more buyers than sellers. So at least when I look at, this right here, for example, 12 million contracts, not a lot on Binance at all, obviously, right? But at least I know that there's over 6 million on the bid right there, or, hit the bid by sellers, right? At least, because that's going to determine whether or not it's either blue or green, right? Based on that blue, or, I use blue, but if you have green, it'd be the opposite, right? Or a different color. So since it's going to be, it's going to be based on the amount of selling at the bid or offer. If it's red, it means that there's more selling. If it was blue, it means that there was more buying. If I'm looking at the total number, I know that it's just more than half, right? So I know that the bid here is more than 6. I know that the, bid here is more than 450. I know that the bid here is more than 1.5, and you'll see right now, right? So I know that there was more than that, right? At least more than that. That's the minimum it could have been to establish that color and to indicate that there was negative delta. But I do like to see both sides. It can get a little noisy. Again, if you see significant amounts of activity come in, you don't need to really have this, because no matter what, if you see a significant amount of activity done that is like multiples of a norm through a higher low, and you see open interest again, sort of corroborating that, then you don't really need to know exactly what side it was on, because it was a ton of risk that was tagged on, and one of them is going to be off sides, right? Yeah, I use market orders. Yeah, I like to see the zeros too. So, Tom, how much do I size? I'm not going to really, I've shared size sometimes, but I'm not going to share that on my YouTube. It's dynamic. So setups that are mechanical and that have a higher probability of resolving favorably, I take more risk on. Setups that are kind of just run-of-the-mill setups that are pretty neutral, I pretty much take just a flat risk amount. But I don't feel like sharing that on YouTube. If anyone has followed long enough, they see what kind of size that I trade. I'm not going to pat myself on the back or say anything on the video. So. A lot of times I always tag on a starter position. So I say this often, I tag on a starter position just to get feel for the position, to make it real. It's also to make sure that I have something on and price actually moves faster than I intend. Most of the time I want to tag something on at market. Sometimes it's the entire thing at market, but at least half, and then try to get filled the remaining with a limit, especially if it's a swing. If it's like a really quick short-term opportunity like this morning, I think I ended up getting a couple limits filled because there's a lot of back and forth. But then I think I tagged on the rest at market. So I'm pretty sure the first trade I took today, I tagged on a little at market, ended up getting filled with limit in the beginning because there's a lot of back and forth. And when no one's willing to provide liquidity, if you place a limit, you're going to get filled. It could be adverse selection though, right? Then once we started remaining bid, I just aggressively attacked it with market orders. But I'm trying to at least balance it out, where I exit a position, trying to exit entirely with a limit order scaling out on the way up. Sometimes you can't. Sometimes it's like, oh, fuck, I missed a turn. This is imbalanced now in the opposite direction. It could completely engulf, like, let me mark it out of this to make sure I at least capture something. So it depends. Yeah, no, relative performance profile is easy to set up. So you just, this plus sign on top left. So see this sign? You just add tickers, right? And when you add them on the same pane. If you don't do it correctly, you can just right click on this and then, create that percent margin versus the regular price margins. And then what you do is, since this is, I use this anchored from a certain point. So I'm like, okay, so we have a low put in, I'm buying the Bitcoin low, I want to know exactly what alts are doing off that same point in time. So as you adjust this, you'll see, off of certain areas on the margin, how things are performing relative to each other. So this is the low this morning, right? It's on the far left side of the screen, you can't see it, but this is the performance off of that low. So FTM, so for example, off of the low, FTM is up 14%, Phantom, right? Looks, Solana, AVAX, 1, Ape. So Ape was up 7 to 8% initially, so maybe Ape is sort of petering out a little bit now. But the starter position is at least going to be a quarter of the size I want to get on most of the time. But a lot of the times, like I've been saying, a lot of the times that starter position will be half of my intended position. And I don't care marketing in, because I know with certain types of trade setups, especially like the ones this morning, I know once it starts moving back in the opposite direction, that it's going to be a pretty hardcore squeeze and the time is of the essence. So if there's a little liquidity there that's available to take, I'm taking it for as much as I can, because the little bit of buying that comes in after that takes us really far away from where that is in a short amount of time. So there's a lot of times, if not most of the time, that my starter position is actually like half of my intended position. And the point of that is, honestly, it's to make sure, like, what happens if, there are some times when the trade just resolves all once, right? From point A to point B, something that I might have, originally thought would have taken a couple hours to play out for a swing. And it's like, holy shit, that just did it in one, 5-minute candle. Ugh, probably not a good idea anymore to be in that anyway. But also, thank God I, had something on, because I ended up being in, the entire duration of that move. So it's always to make sure that, you have something on. The volume profile is the free volume profile on TV. Like, this stuff is all pretty easy to find. You go to indicator, and it's SVP, session volume profile. And then you can see, sorry, I have to look down because I have my mic in front. So the point of control extended forward now, right there. So, any other questions? Not really interested in alts right now, like scanning across the board. I'm interested in BTC, obviously. I explained where I want to get involved. I'm interested with a position in Ape, but I have to, and I jumped in the stream, I have to go through some pairs, because out of these leading pairs, I think that if Bitcoin is if that low is going to hold, I want to be getting in positions in pairs across the board in alts as well. We're getting to a point where, like I said, the last 3 streams, I couldn't stress enough. You might be right with where alts are going in the long term, but they're going to take a really crazy detour to get there. So the jump risk down here is very significant. So jump diffusion, gap risk, whatever you want to say, whatever term you want to use, whatever lexicon, whatever jargon, you're going to see, and I've been through multiple cycles at this point, you're going to see that we're going to get to a point where alts bounce 100, 200%, even more in a day, things that have been dead. And you might have thought they were free shorts, because in normal conditions, it's like, I never am going to worry about a short going 100% against me for a structural short, a decent setup play. Whereas with these, it could blow out your account. And if you don't have a ridiculous amount of collateral, you should not be shorting down here. And even then, it doesn't make sense to continue to be very aggressive shorting alts after this high off. But the point is, you can be right. Like, you probably are right with the direction. You're probably right that 90% of alts the ones that you look at that want to short are going to go down much lower. But the path they take to get there is going to be a really tough one to hold. And it's going to be really violent, and it's more than likely that a lot of people are going to get blown out shorting at these levels. So honestly, I'd rather look for the things where people are capitulating now, and because there's no book pressure and they're very thin, tag on small positions and capture those very significant spikes. So my idea for scalps, and when I say scalps, like there are some times that I'm in trades that last only a few minutes and a few seconds, but most of the times it's like my trades last, they're intraday trades, intraday momentum trades, right? And they're based on levels that I determine through a combination of factors, whether it's market structure, something everyone focuses on, so the major contextual levels, those are where big traps set up, right? A lot of times my levels are just based on volume, so where a significant amount of volume came in, where someone might pivot, cover, puke, and then TPO, right? But it's not like based on any 15-minute or 1 hour chart. I monitor things on either a 30-minute or 1 hour, and then on a very low time frame or even non-time frame chart, whether it's a range chart or a tick chart. So I'm always looking at those two right next to each other and the TPL. So it's kind of like what the setup is you're looking at right here. But then I have, a ton of other screen real estate that's also, you see when I'm switching between. I have my TPO chart always very large. I have my tape very large in front of me. I have my footprint right in front of me next to the tape, so it's kind of like all the flow is always right within view. And then I always want to have at least an hourly chart or a 30-minute chart, candles alone, just to see exactly where we are with respect to local swing highs and swing lows. So AVAX, let's take a look at AVAX real quick. And then it's 2 o'clock, so I'm going to take a half-hour break and then hop on that call. And like I said, not going to get into like charting a bunch of alts, doing anything like that. I mean, the first thing that I want to make sure, if you're looking at alts right now, at least show that they have some kind of decent relative performance to BTC. So for example, FTM is up 15% today. So if we look at, my near phone, right? So FTM, let's say, FTM BTC, this morning up against BTC, right? If we look at AVAX, not as strong, right, against BTC. And then we look at FTM or AVAX against ETH. Again, ETH is shittier than BTC this morning. So the performance already between AVAX and BTC is not there. And you want to be riding, at least right now, you don't want to be in anything that's like, you don't want to be anything based on anything other than momentum and responsiveness. And where's that low from this morning? Is it right there? Oh, because I had on like a much lower time frame chart earlier. Like AVAX, where is it on this chart? Let's see. It's not even, it's if I anchored from the low, that's not bad, but it's compared to like BTC, it's not really outperforming. That's the point. So I want to find things that are at least outperforming BTC if I'm going to long them. But from a structural standpoint, AVAX took its low, so this is a really good area to at least define a position. If you're looking for a swing failure, this is where you do it, right? This is clearly for AVAX, this is the make or break right here. It's just, it penetrated a lot more than a lot of the other alts that I'm more focused on. But yeah, I'll upload that call-in session today. I apologize, I haven't uploaded that yet. All right, guys, I'm going to wrap it up, though. Thank you guys for tuning in. Most of this stream I want to dedicate to going over that setup. And normally I don't like to go too far into like hindsight setups and go step by step what took place between them, because it's very easy to like make an entire YouTube account off of just literally finding things that took place in the past and very nicely piecing them together and saying, you took the trade and all that. This is a good opportunity to go through this morning because I actually find that I could go through the chat that I was in, only pull up my messages versus me screenshotting a bunch of them and making something after. And showing you literally what took place, my thought-by-thought process, and why I got long, the ideas behind the trade, thoughts throughout it, things I saw, sort of chronology of it as it took place, and why I exited. So these are fun because I honestly, I'm getting more comfortable streaming, but sometimes I'll leave a stream and I'll be like, fuck, that was a stream where I just literally talked about what is so obvious. Like everyone sees that. Like what is important about that stream? You know, forget the amount of experience that I have. Forget about how many markets I traded or, you know, anything. Like it's like, well, you're saying like we know that. Like that's cool. Fuck off. Like I have better things to do with my time than watch a stream that tells me the levels that the last guy told me. So I really, you know, the purpose of these streams during the bear market is hopefully give you something that's cool, right? And that sounds like, not to be corny, but like give you something that you don't learn in a book, right? A little bit of nuance, because honestly, that is literally, you know, I give everybody my book list, right? And that's not an exhaustive book list, but at the same time, it's like that's not enough. Like you need all the screen time you could possibly get, because as a manual discretionary trader, and this market is full of, you know, setups that, you know, you're afforded plenty of setups based on nuance. You have to be able to pick up on nuance. So to cover certain nuance and to cover certain anomalies and, you know, slight aberrations that occur, I think that I don't see a lot of other streamers talk about that. Like I don't, you know, there's a lot of people that are incredible traders that know, you know, spread blowout is a really good sign, right? Spread blowout at highs and lows. You're usually not seeing like continuation after that occurs, right? That is spread blowout is usually like your sign of capitulation. You've done a bunch of things to get it, right? You've you know, if anything, a certain amount of the participants that make the market, right, especially right now, literally make the market and make up the composition of the market, literally said, fuck it, I'm out. That's what happens, right? You know, your bid off. So this is and then I'll wrap the stream up. Sorry, I don't want to take too much of your time. Let me show you. I think I could just pull it into this screen. Here we go. So is it tracking right? No, wait, I could have just pressed a button because I have it set up. So this is the DOM, right? So I have this is BTC right here. So this is a tight spread right now. So right now it's collapsed, right? But when it's open, so this is the spread, 50 cents. During that low, the first thing, right, that I'm seeing, because I'm always looking at the tape, always looking at this, always looking at the footprint. I have the tape, the footprint, all these very close to each other. Like I said, the footprint does not have to make the setup perfect, right? But fuck, it really adds that, like, that fuel to, like, you see, like, oh, we didn't just take the low, like, someone just puked below the low. This is tight. It's collapsed, right? Market maker's high and low. I'll show you one sec. Let me just make it so that it's a custom tick size. So here's your market makers, right? Market maker. Then you have your outer spread market makers that are a little bit further away from price. And then you have more, and you have like your hobbyist market makers slightly further away. But when spreads blow out, your market makers are like, fuck this, I'm out, right? They pull, right? They widen spreads. So what happens actually is when you have this set to, this is a very popular platform. This is Quant Tower. You could look at InSilico's DOM. You can see the same thing on any DOM. When you have the spread so that it's not auto-collapsed, this actually got like this. So here is the best bid right now. Here's the best offer. It was down here, right? And the offer was up here. And there was nothing between there. And so if you're looking at this thing all the time, right, that stands out, right? You know, like, oh, that, you know, you don't even have to be looking at it directly. In the corner of your eye, you see like, oh, someone just fucking disappeared on the right side of my screen, right? You know, your peripheral, you notice the slight change. So anyway, I thought that would be valuable, and this would be like a not so run-of-the-mill stream. But that's it. I'm going to wrap it up. I appreciate you guys tuning in. We're really close to releasing what we were working on for the last couple months. It's not something to like, you know, it's not like a token or NFT or trading group or anything like that. It's something that is honestly really useful. And it's not, no one has created this in this market so far. When we release it, you might be like, well, that's like, I thought I was going to get something like, you know, crazy. But it's actually, it'll be really useful for, I know it'll be really useful because it literally answers all the questions that I don't feel like answering all the time. So, all right, guys, everyone have a fantastic evening. It's, is it? Wait. It's Thursday. In the beginning of the stream, I said, oh, because I said I'd do it Tuesday and Thursday. Tomorrow, I host another call-in, but at 2:30 today, I'll share the link. 20 minutes after this, I'll host a call-in. 30 minutes, though. Don't want to run too long. Keep it light. And yeah, if you're not going to be there, have a fantastic day. Don't die out there. Hey, maybe it's the bottom. Maybe it's not. Maybe we fucking puke another 10% in a couple days because shit changes fast in these markets. So don't overcommit yourself, right? But it's much better to buy. Like people will hate on confirmation because there's certain types of silly confirmation, but it's better to buy into this market when it's changed trend in some pretty significant ways, and we're not there yet. So it's still it's very early. All right, guys, adios. I'm out.